A very good afternoon to you all. As we speak, the Chinese markets have crashed this morning, and trading has been suspended on the bourses in China. The CSI 300 has crashed below 7%, and normally when there is a crash below 7% for this particular index, the authorities there stop trading on the exchanges. Initially, you start off with a 5% downtick, for which trading is halted for 15 minutes, and then if there is a further fall of up to 7%, the markets are stopped trading by the authorities there. The prime reasons for the fall in the indices there is the weak data that is coming out of China, particularly the manufacturing data. What happened yesterday was the services data also from China was pretty bad, and that had a big impact on sentiments this morning as trading opened, and it eventually shut at 9:59 a.m. local time in China. The whole idea in China was, let's prop up the services sector, and we want to move from a manufacturing country that's a solid manufacturing base to a more services oriented base. Now, what upset investors was even that is not happening. So what it means is manufacturing is already contracting in China, and now even the services is, which the government is laying an emphasis on, is doing pretty badly. So that's what spooked the markets there in China. Coming back to the Indian markets, they have crashed, and certain key levels have been taken out. For example, 25,000 on the Sensex has been taken out, and as we speak, I think we are at more like 24,952. Now that's a sign of worry for the markets. Another technical level that has been breached is the 7,600 levels on the Nifty. We are trading at somewhere around closer to 7,590. That's again a reason for worry for the Indian markets. Going forward in 2016, I would recommend at these levels you could buy into select shares. I think banking stocks have been hammered really out of shape. Something like an ICICI Bank at 244 rupees looks rather attractive. And if you want to go contrary, you can bet on oil stocks. Crude oil has fallen to 11-year low. So crude oil has fallen to levels we have not seen since 2014. So that's really surprising. Crude oil at $35 a barrel 1 year before. Nobody would have ever thought that crude oil would slump from $110 a barrel to $34 a barrel. In fact, $33 a barrel as we speak. So you can probably bet on oil stocks, because I don't think crude oil would go below 30 in any case. So I think investors should start buying selectively into stocks, particularly beaten down names like banking and oil and gas, for looking for a more longer term perspective of at least 2 years. You're not going to get crude oil prices at these levels in the next 2 years as demand increases and consumers keep driving because of low crude oil prices. So all in all, it's a time to buy, as probably somewhere in the next 1 week or so China would stabilize as the authorities take greater measures there to calm the markets and calm the nerves. They've already started taking a few measures. So all in all, it looks like an attractive level to buy from here on, because we are hopeful that as the budget session comes in, we will see greater buying interest developing. And also, as we speak, we understand that Venkaiah Naidu, as Parliamentary Affairs Minister, spoken to Sonia Gandhi and Manmohan Singh on the GST bill, so probably that would also go through in the budget. So all in all, it's a good opportunity to buy as on account of the crash in the Chinese markets.